The coronavirus has crippled businesses and markets the world over, and the Middle East is no different. The nations going into lockdown, businesses grinding to a halt, and fear gripping nations. But just as COVID-19 truly became a global problem, another serious curveball rocked the region, a collapse in oil prices. As demand fell off a cliff due to the pandemic, a price war between Saudi Arabia and Russia only exacerbated the issue. Now business leaders and government officials are trying to work out how the region claws its way back from the double blow.
We have to continue working. We have to open. I'm talking about the world. I'm not talking about UAE. I'm talking about the world, because UAE, without the world, we cannot act.
We have to survive and also be ready to spring back into action when air travel resumes, because clearly the UAE economy has to have those connections in place with the outside world to be able to function.
As soon as the airport open their gates, I don't think we need to add more hotels or rooms, but it's enough what we have, and there will be really, gradually filling up.
We have to help develop customer confidence and passenger comfort with the idea of traveling again.
I don't think the subject of corona is going to disappear in a month or two, so everybody's going to suffer in 2020.
We didn't expect it at all. Our fiscal adjustment assumptions was mostly on the expenditure side. So the unilateral move by Saudi Arabia did take us by surprise. Nevertheless, it shows that Saudi Arabia is taking the difficult and painful steps required for the fiscal adjustment, which is essential at the moment.
08 going to compare like a piece of cake to the corona crisis.
Coming up, an in-depth look at the unique challenges facing this part of the world in this Bloomberg special, Coronavirus Middle East Impact. First, Dubai is slowly getting back up and running after one of the strictest lockdowns in the Middle East. But what about tourism? 16.7 million people visited the Emirate in 2019, and the industry is crucial to the economy here. The Director General of Dubai Tourism spoke to us about when he thinks visitors will start returning.
We see obviously tourism arrivals dropping to zero, which obviously has a massive impact. And as we look forward, we definitely see some new behavior in tourists. I mean, some of the behaviors earlier on, which were there, such as booking quite late before the travel, much more independent travel and less group travel. We're also seeing new behaviors, a lot of concern and a lot of interest in getting assurance around health and hygiene across the destination. But what I would say is that, if working under the leadership of His Highness Sheikh Mohammed has taught us one thing now through these various cycles, is we have to be prepared for any eventuality. And I think Dubai has a really strong track record in our agility and ability to react quickly to these market changes. And, the one key thing about Dubai is we do respond collectively. So the whole ecosystem is definitely taking the necessary time and effort to get it right so we can welcome the world back to Dubai when things do ease up and it does open.
Hilal, part of that plan to get things right and to the road to normality is going to involve the national airline. It's going to involve Emirates. Can you tell us about a timeline, a capacity restoration? Are we going to be back at full capacity in Emirates? Is that even likely or possible? Or what is the timeline for that reopening? Because you are inextricably linked to the ability of Emirates to deliver.
Look, you're 100% correct. I mean, Emirates is our key partner and we work very closely with them. In this scenario, we're also, working extremely closely with all the public and private sector partners. Our aim is to make sure all the aspects of the city are fully aligned and well prepared to receive tourists as soon as air travel opens up. Now, with regards to Emirates, they have cancelled until the end of June, and they're taking bookings now for the beginning of July. And we're obviously working to support them on the reopenings of routes by market. The thing about this current scenario is it's more of a global question, as you know. Many airports internationally remain closed, and it's really about the bilateral discussions that are underway to have a coordinated approach to reopening. My priority and our priority is obviously ensuring the well-being of our guests, but at the same time, I would say July would be the time that we start to see the air open up and we start to see the Emirates network rebuild itself.
Hilal, in terms of some of the measures you're taking to help the industry get through this period, can you run us through measures that might be on the table or could be implemented soon?
Well, look, I think we're very grateful on the quick response and the strong program put in place by the federal and local government. With specifically to the tourism sector, they've seen support across obviously reductions, cancellations and deferments of fees, fines. Specifically, the government fees in Dubai, such as a 50% reduction in Dubai municipality fees, also reduction on utility costs. One of the major issues, as well as you obviously know, is the liquidity access. And the central bank has come in quite swiftly and with a strong package, which has in the tourism sector trickled down to the local banks. Specifically, penalty-free loan rescheduling over a longer period of time and lower interest costs, which is definitely helping the sector. We're obviously, as the Department of Tourism, continually holding workshops with different parts of the sector. And the key thing now, as people are moving away from thoughts about the immediacy of the health crisis, is people are starting to think about reopening. And they're starting to think about the support they need across different markets. And that's something we're definitely going to put in place. We're going to ensure that we have the necessary support packages for us to really get back to full capacity once the markets allow us to do that.
Well, Dubai hotel mogul Khalif Al-Habtoor says his companies are bleeding because of the coronavirus pandemic and the economy cannot wait for a vaccine to become available before major activity resumes. The billionaire told us his group hasn't yet cut jobs in the hope that the global lockdown will be rolled back by July, allowing tourists to return.
We cannot wait for a vaccine up to the end of the year and to stop working. We have to continue working. We have to open. I'm talking about the world. I'm not talking about UAE. I'm talking the world, because UAE, without the world, we cannot react.
Can I ask you then, preparing the business, you've got an auto business, hotels and schools. Are you having to cut staff, cut salaries? What changes have you had to make on that front? The world is paralyzed. No doubt that we gave a lot of people, they have their due holidays. We gave them their holidays to go live locally, overseas, whatever. Most of them, people who doesn't have holiday, we are giving them, unpaid leave, some of them, and we are feeding them, transporting them, medicating them, and give them accommodation temporary for, few weeks. Hopefully things will come back. And if this stretches on, are you going to have to cut back on the staff numbers across the business?
I think you will have no choice. I have to be honest. We will have no choice except to cut, but we have to be very careful also, to cut. But I am hopeful, I'm hopeful that things will react again positively and will work. But in case, definitely we will minimize in case of anything else, we will minimize staff to go for open leave for a few weeks, few months.
Can I ask you, Khalif, then, in which case, the hotel business, do you see you reopening all of the hotels?
I hope so, but I don't think when all the borders closed, you cannot open the hotels. We opened the hotel. We have Habtoor Palace open, but we are paying losses.
Will you be able to rehire when you progress and reopen some of the businesses? Do you think you're really going to be able to rehire everybody?
Well, we haven't released anybody. We haven't released anybody until now, and hopefully we will not release anybody. For example, two of our company working. For example, Diamond Lease. Diamond Lease is hiring cars, leasing cars. We are working, pushing hard on that to compensate some gaps. Schools is working, even it is from distance, but still working, and we are helping some of the parents in that area who's we take case by case. But the major thing is hospitality in the world and airlines and car business motors. People, for example, they don't come and buy as much as before. You know, cars you used to sell to cover your overhead. Now you cannot cover your overhead. We are bleeding. We are paying. You know, we cannot throw everybody out. We cannot release everybody out. We try our best to put a plan, you know, to work together for until things improve.
Dubai's property market was already under pressure long before COVID-19 and the oil price crash. And the prospects for many developers are looking even grimmer now. But the chairman of Damac Properties is adamant that his company will pull through.
Today, I think it's a great opportunity to buy because products are selling in secondary market below the replacement cost. And actually, there are people who are coming and looking for a bargain. And I get messages from my management, okay, sometime for a ridiculous price, sometime for a price that we can negotiate. So we're still selling at a much lower price. In Damac, we're going to suffer this year from the P&L point of view, but our cash flow is sufficient and we're taking enough measures to weather the crisis.
The coronavirus has reshuffled quite a few capital trends in terms of flows, but also generally movement of people and goods around the world. What are you seeing in terms of changes when it comes to your buyers? I mean, you're saying there's a lot of appetite, people are still coming up and looking for good deals. Is it still the same crowd that's coming to Damac from China, for example?
We don't have a lot of Chinese, but you know, we have customers around the world. And yes, as I said, I see a lot of customers coming looking for a bargain. You know, there is money around the world, and especially in the third world countries, you know, in that 1% or 2% wealthy people, and they're looking for a bargain and they're coming and looking for that.
So are you selling any assets at all, planning to dispose of any of your, let's say, valuable portions in your portfolio to safeguard liquidity and ongoing obligations?
No, as I said, alhamdulillah, we are not under any pressure. We are not canceling a single project because most of our projects are 60% and more. We continue. We have enough money in the escrow to build the whole our entire project without any delay. We are focusing on the cash, on the collection. Yes, we're giving some discounts and some incentives for people who are willing to pay, let's say, ahead of time or on time. That's the thing we have done for the customers. But for the new sales, we have reduced prices to 5 to 10% in certain areas, but we're not reducing more than that.
Up next, just how will COVID-19 change travel at the world's busiest airport for international passengers? We hear from the CEO of Dubai Airports next. This is Bloomberg. The head of Dubai's airports is confident that passengers will return to the skies in droves once they believe it's safe. He's just not sure when that will occur. Activity has slowed to a trickle at the Gulf hub that handled 86.4 million passengers last year. The CEO, Paul Griffith, spoke to us about how he's preparing for a resumption of services.
Throughout the airport, we're operating thermal screening where we're detecting whether elevated temperatures are present between either staff or customers, and that gives us some indication that we ought to make some further investigation to see whether passengers are fit to travel. We are maintaining social distance throughout the entire airport process. We've got stickers on the floor, we've got staff managing to make sure that customers that are traveling do respect those social distances. We've got barriers throughout the airport to enforce certain walking routes. We've got plexiglass screens in front of check-in desks to make sure that our staff are protected. So all sorts of measures, but clearly we will not be able to operate anything close to our full capacity if we have to put those in for the long term.
I was going to follow up on that, Paul. What are we looking at in terms of Dubai Airport's new post-COVID social distancing capacity?
Well, we're still evaluating that at the moment. At the moment, we've got Terminal 2 and part of Terminal 3 open with half of Concourse B. we've been able to, as an economic measure, to hibernate concourses A, C, and D, and actually close Terminal 1, and foreign carriers are currently all operating from Terminal 2. So within the terminals that are operating, we've clearly got staff helping customers through, but as the number of flights starts to increase, as the world starts to open up, clearly we're going to have to bring more of our facilities back online.
And do you have any indication at all as to when you'll be able to return to the kinds of levels of passenger flows that you had in 2019?
Unfortunately, the answer to that is dependent on so many external factors. We've got to see a world where bilateral arrangements are struck between governments that are confident that both countries affected have got the virus under sufficient control to be confident enough to open their borders.
We've seen quite a few corporates adjust to new economic realities, at least temporary for sure. Some sectors are getting hit harder than others. Have you had to take any decisions on a cutting salaries front, on a potential redundancies front, on a potential restructuring front?
Well, clearly we were affected where our daily flight numbers fell in just 1 week from 1,100 movements a day down to about 17 movements a day. And that had a drastic impact, obviously, on our revenue. So we took instant action, and very fortunately, Dubai Airports operates an outsourcing model where about 50% of our full-time employee equivalents are on outsourced contracts. So we were able to renegotiate with suppliers and reduce our workforce by 50%. And the residual 50% we're going to redeploy into frontline operations to help us recover without incurring the additional cost. We've also cut our capital and operational expenditure to take immediate steps to shore up our liquidity. We're such an important strategic asset within Dubai that we have to survive and also be ready to spring back into action when air travel resumes, because clearly the UAE economy has to have those connections in place with the outside world to be able to function. So we're an essential part of that strategy, and we're ready to go as soon as we get the word.
Up next, as the Saudi economy slumps from the double impact of the coronavirus and the oil price crash, the kingdom announces drastic measures to shore up its finances. The details are next. This is Bloomberg. Saudi Arabia's economy is reeling from the slump in oil prices and lockdowns to halt the spread of the coronavirus. Now, the kingdom is cutting spending and tripling VAT, moves likely to damage consumption and hurt the private sector. Bloomberg's executive editor for the Middle East, Riyadh Hamadi, laid out the details.
I think it's a surprising move. It's maybe not completely surprising, because he had indicated that they have to do something to recognize the fact that their oil revenue is shrinking at the time when non-oil revenue is shrinking as well, because people aren't spending. The economy is getting hit from at least a double whammy now. So this is their response to that, recognizing the kind of unique situation that especially the Gulf countries and specifically Saudi Arabia is in, because of the hit on the oil revenue. The finance minister was at pains to say this is a reallocation of spending. So they're taking money from projects that are either delayed or postponed, and putting that into areas that they think are a priority right now, which is healthcare and making sure that Saudis continue to have jobs.
Riyadh, the two elements of this, one is the contentious VAT increase, and then you have the removal of government allowances. I mean, both of these are politically charged subjects in the kingdom. How is this going to be received by the average Saudi citizen? I mean, what do you expect there?
Look, I mean, I think
all of us, if we see a government raising taxes essentially or reducing our subsidies, we're not going to be happy. So I think the Saudi population is going to be concerned about this. Now, Mohammed Jadaan again said that this year, this increase in VAT is probably not going to bring in that much revenue because Saudis right now aren't spending. They're not able to spend. The country is pretty much in lockdown. And he also said these allowances, these inflation allowances, were not a big deal. And yet still, I mean, it does signal a message that to the Saudi population that the government cannot cover all the costs, cannot maintain maybe what is considered by some as a generous government towards its population, and that some of the reduction in revenue that the government is seeing has to be made up elsewhere.
In many ways, one could say this is a judicious move by Al Judaan to bolster the credit rating to the market to which they need to lean into the most.
I think that's right, but this is coming at a highly unusual time, a highly difficult time for the world, not just Saudi Arabia, and the standard kind of the orthodox wisdom is that right now is a time for governments to open their pockets, to spend, to make up for the collapse really in economic activity.
Well, Monica Malik is the chief economist at Abu Dhabi Commercial Bank, and she weighed in on the issue, saying that she was surprised by the measure.
We didn't expect it at all. Our fiscal adjustment assumptions was mostly on the expenditure side. So the unilateral move by Saudi Arabia did take us by surprise. The actual impact this year in raising revenues will be limited, as outlined by the finance minister, because of the expected sharp fall in consumption. It will slow the recovery post-COVID-19, but nevertheless, it shows that Saudi Arabia is taking the difficult and painful steps required for the fiscal adjustments, which is essential at the moment.
Some would say that this is Mohammed bin Salman getting back to policies that he was trying to enact. Monica, as you run the numbers, we've spoken to Samba, we've spoken to JP Morgan. A number of them say, I think JP Morgan say, look, an overall contraction of 3% is just too optimistic at the moment. Standard Chartered say a contraction of 5%. What do you think? With the tripling of VAT and a reallocation of $1 trillion riyals of capital expenditure, what's your best estimate for this year and next year on growth?
Well, this year on growth, we're expecting a contraction of about 4% as yet, but we haven't adjusted that to the pullback in Saudi output that was announced yesterday. Again, a move to support the oil price. So we definitely see downside risks to our current forecast. But at the same time, we haven't made much adjustments to our fiscal deficit forecast as well. Our fiscal deficit forecast already assumed a 10% contraction in government spending. But as you mentioned, Manas, yesterday the comments by the finance minister saying that government spending will be close to the budgeted level would mean that actual pullback in spending would be much less than we're forecasting. So we're actually waiting for more data. Some of the measures announced will be off budget, as will some of the spending, but we really need to see how much of that feeds through into the budget. Nevertheless, it is positive to free up the space for the essential spending that Saudi does have to take, given the health crisis, and to support businesses.
And that's it for our special program, Coronavirus Middle East Impact. Stay tuned to Bloomberg TV and radio for continuing coverage of this story. And check Bloomberg.com for the latest news and analysis 24 hours a day. I'm Yusuf Gameluddin. This is Bloomberg.